Hello, everybody. This is Joshua Hayes at BigWaveTrading.com coming to you with December 3rd stock market wrap-up. Let's go ahead and check out the index chart. So I got to get there. A little unprepared today. Now I'm ready. First off, let's go ahead and take a look at what the indexes look like. The S&P 500 on the short term is in a bullish uptrend. Intermediate term, downtrend. Sub-intermediate term, just using the November highs, downtrend. And long term, no doubt about it, downtrend. So I want you all to remember we are only in an uptrend on the short-term time frame. And once again, just like the last time we tried to rally, lower volume every day almost. Now, I need to go look at the NASDAQ because I haven't looked at any of my indexes yet. So NASDAQ does have volume rallying the last 2 days on the rally attempt, and over 3 days it's still down negative 2%. The higher volume is nice to see, but with volume still below average and with only decent volume here on the bottom, with volume being below average every day since then and nowhere near the October and September surges, I still find it troubling to call a bottom. Can I call a short-term rally? Sure. I'll play anything that wants to go on the upside. I have one new long today. I wish it would have based for a while longer before I'm making a new long, but oh well, it's still giving me a signal. And others are setting up. So it's possible that we could have some longs in the future to go along with the new one today. This will be now the 5th stock I'm long currently. I'm long 4 stocks already. Now I'm long 5. Some of the lowest numbers ever, but I think I was down to just 2 there not too long ago, and that was the lowest ever. I've never had only 2 longs since I started. So now that you see that the New York Stock Exchange S&P 500 are rallying on lower volume, the NASDAQ volume is barely above yesterday's total, but still well below the 50-day volume average, and you can see prices below the 50-day moving average. How can we be too excited on this market? I just don't understand why people are so excited, so for sure about calling a bottom here, especially when the volatility index still is holding the 50-day moving average. It won't even break and stay below it. It's still holding and showing an extreme amount of volatility that shows volatility is a code word, as Kramer said yesterday on Mad Money, for crap or bad. And that's what we have here. We just have a bad rally right now on lower volume. Yay, I have one new long today. If this was a for real volume from a follow-through day yesterday that IBD decided to call, which is a lame follow-through day, and remember, 4 out of 5 follow-through days fail. Not all fall-through days then obviously lead to a new bull market. However, you all need to understand, no bull market has ever, going back to 1890, has ever started without a follow-through day. There's always been a bottom after 3 or 4 sessions, a follow-through day on higher volume with a price surge of around 1 to 4%, anywhere around there. Anything over 4%, you've probably got a short covering rally, and it's probably not very good, unless it comes on the initial stance of the rally. But on the follow-through day, if you get too much too soon, it's normally not a good sign. So basically, we can see where the indexes are. They haven't changed, and even since the big down day on the 1st of December, we haven't even come back to take care of that, as you see on the NYSE and NASDAQ here. So put things in perspective. Weekly, we're looking better. We've got tails everywhere. Look at all these tails in NYSE. Tail, 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 tail. Let's look at the NASDAQ. Tail, 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 tail. So we're working on something here possibly. We could possibly be working on a bottom here. The point is it hasn't been factually put here yet. And there's not enough longs telling us that it's here. Now, at the same time that we look at that, let's go to the commodities. I want to see what the CRB index looks like now. Once again, hitting another new low. So let's go take a look at the precious metals. Platinum, holding up in the consolidation area. Silver, holding up in the consolidation area. Gold, holding up in this trading range that we have here now between the October, November lows and the November highs to back here at October as it crosses through the August highs also. So it got a little bit out of range in September, October, came back, got a little bit out of range in October, back in this range now from September, November. So 774 looks like it's on a lockdown for a little while. And let's look at the United States dollar to see how horrible it looks, and it doesn't look that horrible. Continues to hold the 50-day moving average ever since getting above the 200-day and 50-day moving average. Continues to be in an uptrend after breaking out from the flag pattern. It's not the most bullish chart, but it's a lot bullish this year compared to a lot of other charts out there. A lot of people said to go short the dollar and to go long gold this year. Well, I'll ask you, how's that been? Let's say you went short, or you went long gold, as you see there, down 10%. And let's say you went short the dollar at the beginning of the year. That's only a 13% loss for a combined 23% loss on a futures contract, which could mean up to 100% if you're using over 5-to-1 margin. So that's not very good. Not very good, not very good, not very good at all. Let's see, is there anything else that I want to show you right now? There is not. Nothing much has changed after today's up day. People can call a bottom all they want, and for as far as I'm concerned, we may have a bottom. But to see higher volume on sessions that then led to lower prices, and then having lower volumes on this bottom, and then calling it a for sure bottom, I don't think so. I'm not going to do that. I'll let the charts do the talking for me. The trend is still below the 50-day moving average and 200-day moving average, and it's been like that ever since they first moved below it in November. Ever since in November, when it, after heavy distribution and leading stocks failing, finally held below the averages and couldn't get back above them. Tried in May, but immediately reversed and fell. The 50 could never get back above the 200-day moving average. It's just been a mess. And if you've been short since the top in October, you still have a 47% gain on the New York Stock Exchange. So if you've been going long, you're hurting. And as I can tell by the top growth fund, since I always tell subscribers I want you to be doing as well as at least the top 5%, or else why run your money? Give it to them. I personally want to be doing as well as the top 1%, which means the top 5 on the IBD list. That means if I'm doing better than a negative 40%, I'm killing the market, which is pathetic, but it's the truth. The fact that I've been down 10% in one portfolio and about up 25% in one portfolio tells me that I'm doing okay and I shouldn't be so hard on myself. So I'm going to go ahead and wrap up part one there. This market is in a short-term uptrend, but overall the trend is still down, folks. Don't get ahead of yourself. I only have one brand new CanSlim long tonight, and if this was a new bull market, I'm telling you, even after the 2005 rally that nobody believed in, Rev Shark, Helene Meisler, Alan Farley, I don't care who it was, whoever it was, they did not believe in the rally. I believed in it. Why in 2005, late 2005? Because I had gold stocks breaking out. I had still other stocks breaking out. GIGM gave me a 250% gain. ERS gave me a 550% gain. I still had stocks breaking out. So I listened to the charts. The charts told me in October 2005 that the turn was coming and that there were bullish charts out there to be bullish when everybody was poo-pooing the rally. Now that people are calling a bottom, the charts tell me, not yet. Not yet, son. We need more work. So until there's more work in these charts, I'm not getting bullish. I'll recognize that we are in a short-term uptrend. I'll recognize I do have 5 longs. I'll also recognize that I also only covered 2 shorts, full covers, and they were new shorts, not shorts that have been long-term winners that have 60, 70, 50% gains that then gave me a full cover signal. No, these full cover signals came from recent shorts. So that's not a sign that the bear market's over just yet. So hate to be the bringer of bad news, but it's not over yet, folks. This is Joshua Hayes of BigWaveTrading.com. Capital preservation is the name of the game right now. Aloha.